Advisors. We are very excited to be talking to you today a little bit about the area of decision management, and specifically our webinar is on preventing fraud in financial services using decision management. Not only do we have Neil joining us, but we will also have a very exciting global banking case study that we will use to describe a common situation that we are seeing and which we are preventing using decision management capabilities. So let's dive in. First, our speakers. Neil Ward-Dutton is a co-founder and a leader in the IT industry as a very impactful advisor and analyst studying many areas of digital transformation, business process improvement, transformation and management, enterprise architecture, and broader IT strategy. Neil advises many large European organizations and studies the sector, the IT sector, from a global perspective. Also joining Neil is Stephen McNichol. Steve is our head of sales and business development at Sapiens Decision. Steve has been in the IT industry for many years. He currently is the vice president of business development for Sapiens Decision. Prior to that, he worked at TTI Telecom and has had experience in Cividia Networks as well. My name is Kramer Reeves, and I'm the head of product marketing for Sapiens Decision, and I look forward to emceeing this exciting event throughout the next hour. As a reminder, there's Q&A that we will be doing. There's an active chat. You're welcome to post your questions throughout the webinar. This webinar is being recorded, and it will be available on sapiensdecision.com under Learn More. Now, to our event today. First, we're going to start with Neil, and he's going to talk about preventing fraud in financial services with decision management. Then we'll turn to Steve, and he's going to dive into this case study. It's a very exciting banking case study in the area of fraud and how decision management practices and software were applied to help prevent fraud from occurring. Then we're going to have some next steps and call to action in the Q&A, but as I mentioned, feel free to provide your questions starting now, and we'll answer them throughout the webinar as they come up. So without further ado, I'm going to hand this over to Neil, and we're going to dive into the MWD Advisors' view of the space. Neil, over to you.
Thanks very much, Kramer. So let me just see here. I'm going to quickly go to my presentation mode. Hopefully you can all see that.
Coming through clear.
Excellent, thank you. So firstly, thanks so much to the guys at Sapiens Decision for giving me an opportunity to talk to you today. This is a really, really fascinating and fast-moving area, and it's great to see that there's so many people on the webinar today wanting to find out more. You know what, I'm really just the warm-up act, frankly. Steve from Sapiens Decision has got a great story to tell you that I think has had some major impacts. So we're looking forward to that. So my job is really just to set the scene, paint the big picture for you, and explain some of why this area of decision management particularly is so important in today's financial services industry, and actually has broader impacts too. But we're focusing today principally on financial services. So let's get started. You know, as Kramer already said when he introduced me, so I'm very privileged to be able to work with many organizations actually across Europe particularly, but some further afield as well, across multiple industries, not only in financial services. And what myself and my team are seeing is a very, very fast changing environment where it's really external pressures that are creating, forcing organizations to rethink the way they they actually get work done, the way they take decisions. So we're seeing, broadly speaking, four buckets of pressure, and the shift towards digital technologies, digital applications, digital services is driving a lot of this. So we're seeing new kinds of customer expectations, whether that's multi-channel service, the expectation that I should be able to get information and I should be able to understand the status of things I've asked for almost instantaneously. And new expectations around transparency. I should be able to understand what's actually going on when I've asked for something. Anyone who is young maybe on this webinar may not realize that it wasn't a long time ago that actually you were very lucky if you could actually easily find out what a company was doing about solving a problem you might have. Expectations have changed very quickly there. We're seeing new digital native competitors, and I'm going to talk about that a little bit more specifically around financial services on the next slide. But of course we're seeing that across sectors, whether that's in media, in leisure and hospitality, travel and transport, as well as in banking and further afield. Importantly, we're also seeing a changing risk landscape. So, the rush to provide richer and richer, broader and broader online services is creating whole new attack surfaces that organizations have to defend through. And it's not only about the edge of your organization, there's actually new kinds of risks that come up as part of this wholesale shift as well. So there's greater opportunities in many sectors for intellectual property theft. As organizations become more networked, they start to use more dynamic webs of partnerships. We see more kinds of risks around human capital, around potential stealing of secrets or improper practices at work that are harder to understand and control because of more and more agency relationships, partner relationships, and so on. We're seeing new kinds of risks around product liability, actually, as products become more digital. And this is not just in financial services. There's new kinds of liability that can arise around the use of products, as well as identity theft and, of course, the obvious data breach risk and so on. And we're seeing changing stakeholder expectations, particularly from regulators, around the degree to which businesses should be sustainable, they should be good corporate citizens, but also that they should be transparent and they should be very effective in providing information to the market in terms of their ability to serve customers, their ability to operate in a kind of correctly leveraged way, and all of that good stuff. So a number of different dimensions of new pressure, and it's creating a lot of uncertainty. Specifically in financial services, so this is a chart that I've taken from another research provider specifically focused on the venture space and on private equity and so on, a company called CB Insights, that recently put together this great graphic to just illustrate how mainstream banks are becoming kind of unbundled because of digital disruption. So you can see here, this is a homepage from the HSBC retail bank. And what this graphic shows is the swarm of new digital native startups that are nibbling away at the edges of the offerings and the services that are in play from banks, not just HSBC, but this is just an example. So you can see how startups are eating away at payments, at mainstream kind of checking and credit accounts, investments, investment planning, money transfer. That's been a huge area of innovation. So large established banks particularly are under a lot of pressure from new digital native startups. But equally, we've got new challenger banks. So here in the UK, we've got people like Metro Bank that have gained quite a lot of headlines, and we've also got kind of cross-sector competition. So we've got competition from supermarkets, so offering now not only credit cards, but actually offering offering loans, offering foreign currency services, and so on and so on. So we're seeing in financial services huge waves of new competitors, and not only just the digital disruptors, but established players from other sectors using digital technologies to essentially compete in sector where they've never really had serious footprints before. So very, very fast-moving, dynamic environment. In this context, what we're finding is quite a lot of confusion, actually, about where the real opportunity around digital technology lies. Fundamentally, the power of digital technology in terms of how you might respond to these threats is about the more efficient coordination of resources. And on this chart, what I've done here is mapped out different kinds of resources that can be put to work more effectively through digital technology. So this little matrix here shows on the left resources that are internal to your organization, so resources that you control and own to some degree. On the right are resources that are external. They're in the market, they're in your industry, but you don't control them. At the top are resources that are fundamentally about people and their knowledge, and at the bottom are resources that are about business processes and about tangible things. What you can see is there's 4 different perspectives here on what digital technology can do. When you talk to chief marketing officers, they're principally concerned about the orange box. How do we use digital technology to use our knowledge and our people to create better experiences for customers? When you talk to chief strategy officers, they're principally involved and interested in the red box. How do we create new kinds of products and business networks using digital tech? When you talk to communications and HR people, they're interested in the green box. And when you talk to operations leaders, they're interested in the blue box. So how do we use digital to drive more effective operations? Now, this is important because it's only when you really understand the big picture that you understand how you can actually respond to threats and drive kind of breakthrough improvements in your business at leveraging digital technologies. And the really important thing to realize is that all of these 4 boxes are connected, or more accurately, that they have to be connected. They probably aren't connected actually today, but the critical thing to realize is that the core value of IT today in a digitally transforming organization is about connecting these 4 domains together, bridging the gaps between these different leaders and their own views of the world, and enabling the seamless coordination of work, sharing of knowledge, sharing of resources across those boundaries. Because for sure they all should be and need to be connected. And it's only by bringing these things together that you're really able to drive the breakthrough improvement that you're going to need to deliver to be able to compete effectively. Now, excuse me, let's talk a bit more about what digital transformation actually means. And this, again, is pretty relevant, although it's still quite high level. Because, again, when we talk to CXOs of different kind of colors, if you like, so some of these guys are in marketing and sales, some of them are more in operations, and some of them more strategic people, and so on. They tend to look at the left-hand side of this picture. So when they think of digital technology and digital transformation, they think of the end state. They think of, oh, well, you know what, this is all about leveraging what you might call the Internet of Applications, so cloud computing platforms, cloud-based resources, cloud, software as a service apps. Or maybe they're thinking of the Internet of Conversations. Well, we can leverage social networks and social media outlets to get closer to our customers and partners. Or maybe they're looking more at infrastructure and products. So, we're able to connect to new kinds of wearables, and we're able to create new opportunities around, new kinds of payment mechanism or beacons or whatever it might be. Or maybe it's more around mobile. But actually, the more fundamental, and it's quite a nuanced point, but the more important point is actually the fact that change itself is changing. So on the right-hand side of this picture is the bit that we all have to get our heads around. This is really explaining that the really important thing to figure out about digital transformation is it's not so much the end state, it's actually about how you get there. And what I've tried to show with this graphic on the right is that there's two key pieces that are intimately connected. Digital transformation fundamentally is about understanding that digital technology enables you to instrument your products, your services, and your business processes and your decisions, and then change those, create much more agility of those, because you're able to understand what's really going on. So fundamentally, a digital strategy is a data strategy. And by applying digital technologies to your products, your services, your processes, and your decisions, you're able to understand those, understand their effectiveness, and change in a much more scientific, a much more rapid, much more agile way, and to iterate. Okay, so a fundamentally different kind of change opportunity that is basically all about instrumentation and more rapid evolution of the life cycle around products and services. Now, I'm going to quickly pass through this, but fundamentally, the key challenge that we see in any large organization, and you know what, this is a huge deal in most large financial services organizations too, the real call to action at the strategic level is we need to create better experiences for our customers that work across channels, across venues, across platforms. But fundamentally, large organizations, typically speaking, have spent 15 years going in completely the opposite direction. Actually, they've been dispersing their operations around the globe, creating shared service centers, creating new kinds of partner networks, offshoring. So how do we create more integrated experiences if, in fact, our operations are dispersed? You know, it's kind of scattered to the wind. This is where digital technology comes back in. So the real value operationally of this stuff is about what you might call weaving a digital thread that enables you to coordinate work, share knowledge, make decisions effectively at scale over and over again with confidence. And you need to be able to do that in a way that connects the experience at the front end of your organization all the way through your operations, wherever they may be, and maybe even back out towards your suppliers and the other people who are part of your operational environment. Now, this is where it gets even more interesting, I think, because actually thinking about that picture, you know, we talked about sharing knowledge, coordinating work. We see a situation in financial services as well as in other sectors where there is really this big conundrum about knowledge and where it sits and how it's managed. Fundamentally, what we see when we look at large organizations is that increasingly they value themselves largely in terms of intangible assets, in terms of things like intellectual property, brand equity, those kinds of things, and less in terms of things they own. So if we were to simplify this to a fairly extreme level, you might say fundamentally the value of companies is shifting from what you own to being about what you know and how well you can leverage that knowledge to drive great outcomes for customers. But we have a real problem here, which is that actually in many job functions in organizations, again, particularly in large organizations, when you look at those job functions that are closest to the customer, they tend to be fairly high turnover job positions. And in fact, what we're finding, what we can see from the quote here is that there are many sectors and job functions where they kind of become known as 100% turnover occupations, where the lifespan of somebody in a given role is less than 1 year. And those overall account for nearly now 25% of the US workforce. And call centers, branches, retail stores and so on are real hotspots for this kind of work. So if we go back to our previous chart, what we see is that if we're trying to create this digital thread to manage knowledge, to share knowledge, to make decisions at scale, we have a real challenge, which is a lot of the really high turnover jobs, the high turnover positions, are at that front edge where we really need to leverage our corporate knowledge and drive the right outcomes for customers. This is where the rubber meets the road, of course, yeah, when we're really interacting with people, when we're onboarding new customers, where we're trying to catch potentially anomalous situations and drive results out of those. There's a real challenge with how we manage that knowledge effectively and do it at scale. And you know what? This is fundamentally where decision management comes into the picture. Because
Neil, can I back you up one to your chart on the transition over the time frame, your bar chart?
Yeah, absolutely.
I think that this is an incredible statistic for the audience to understand, and the first time I saw it, it didn't resonate, but after I was able to absorb the point you're making here about these intangible assets growing to over 80 to 84% of the balance sheet, it really does lead to where you're going right now with this idea of managing better your intangible intellectual property and decisions, business logic, how you manage regulatory policy, how you manage transformation, even the processes across your organization. All of these things really do lend themselves to being managed in a different way. In this intangible trajectory that you're showing here is where companies are differentiating. So I just wanted folks to digest this just a little bit further because it really does set up your next section nicely.
Okay, awesome. Yeah, no, I think it's a really powerful chart that shows just how much, particularly in developed markets, like the US and Canada and like the UK and other Western European economies, the value really is shifting to being all about knowledge and how you can leverage knowledge effectively at scale, and capabilities like decision management are, they're really essential, let's call them kind of infrastructure, and I don't mean in a technology sense, in a business management sense. They're infrastructure for scaling knowledge and its application, and so they really need to be thought of as actually strategic kind of corporate capabilities, and often we find in organizations it's not really thought of that way, and that's the big takeaway I kind of want to leave people with today. So I'm going to skip forward again and just bring decision management into here. So, you know what, just recapping quickly, I've talked about, the speed of change. I've talked about new kinds of risk. I've talked about the desire to create greater experiences for customers across, that really integrate experiences across channels, venues, products, channels. I've always, said channels. But, we really need to take this matrix of potentially silos of business knowledge and decision making and create singular integrated experiences. Okay, so we have a really thorny, frankly, mess of market dynamics that create the need to really grab a hold of this and drive some structure and scale into it. So what we find, yes, in financial services, and yes, also in many other sectors too, is core and repeated demands from teams trying to drive improvement. So often these are kind of hybrid business IT teams. We need to become more agile. We need to become more transparent in terms of how we operate and how we deliver responses to our stakeholders, whether those are customers or regulators. We need to drive consistency of our service and our product across channels. We need to be more scalable. Okay, these things come up again and again and again with kind of almost depressing regularity. Now, really importantly here, the challenge with a lot of this stuff is that there are really important decision levers here, right, in terms of key decisions that need to be made at scale in order for us to really drive a digital transformation. Questions like these are a key critical questions that need to be resolved, and it's not easy actually without a systematic platform and infrastructure to do this. So questions around how do we make sure that we are being consistent, transparent, agile around product innovation when it comes to things like eligibility. So figuring out who is able to have what. How are we able to be agile, transparent, consistent, scalable when it comes to onboarding new clients? When it comes to pricing, products and discounting around bundles, promotional management. Heavens, some of the promotional kind of zoos, huge kind of catalogs of promotional product configurations, incredibly complex to manage. How do we effectively cross and upsell, do that at scale with transparency so we know we're doing it right in an agile way? How do we detect fraud? As we're going to hear in a minute in more detail, a huge issue, and one that is gaining, the footprint of this is becoming ever more important to understand. How do we resolve problems? All of these things are critical breaks, really, because without this infrastructure to drive scale, we can't really address these, and these essentially become bottlenecks from us really reaping digital benefits. And the challenges that are there around, today, decision management, decision making at scale in these areas, it costs more than it should. Typically, it's inconsistent. There's variation across products, across teams, across channels, and there for sure is a lack of visibility and traceability. And so this is really where we want to get to with decision management, solving these problems, and that's what decision management is all about. What I'm not going to do now is go into some big architecture conversation. I'm going to leave you with this one point. And it's not really about technology at all. It's about the value of the technology and the value of the approach. So decision management is, yes, underpinned by technology, but it's also about practice. Fundamentally, what is it about? It's about creating shared knowledge. So on the left, we have the ideal scenario where business stakeholders, senior people in the business, drive a strategy. And then there are people who create policy, and then there are people who actually just execute that policy consistently. In an ideal world, that's how life would be. Of course, life is nowhere near that simple. In truth, what you have is these 4 different groups, and without a solid decision management practice, they each essentially operate in their own world. You have business leaders who drive sponsorship around strategy. You have business analysts and similar people who take that strategy and they try to formalize policy and model policy and figure out what the impacts are going to be. And then you have people who implement that. They document the policy and they train operational people to then make decisions day to day. And then you have the operations guys who are supposed to deliver outcomes. But without a formal and a scalable decision management practice, those guys just operate in their own silos, and there's no way to really link their knowledge up. Fundamentally, the business value of decision management is about creating that shared space where you have shared visibility of what decisions are being made, why they're being made, and how they're being made. And we get shared understanding of performance. So think back about what I was saying about digital transformation. This is instrumentable, so we can understand what decisions are being made. When what decisions have been made, we can really understand how to improve those decisions because we have the data. We can start to actually execute some quite sophisticated analysis so we can understand how to improve over time. And this is a game changer. So this is really about consistently reasoning about policies and decisions, consistently changing with confidence so we really are able to link up business strategy with execution. And that is, as I said, if you get it right, an absolute game changer. So you know what, I've talked enough. You guys need to see that this is a strategic business tool. And the call to action from my side is that, now is the time to actually understand it and to explore it and to profit from it. And now I'm going to hand over to Steve to talk about a really interesting case study.
And before Steve jumps in, thank you, Neil. I just want to remind folks of the quote there. It is a game changer, and in fact, applied the right way and against some of the use cases that Neil talked about, more than just fraud, quite a few others that we're seeing across the industry. We're going to go into fraud right now, but quite a bit of appropriate and applicable opportunities for customers and companies in the financial services industry and beyond to take advantage of this ability to tie to as you also said, Neil, I like the point about the shared knowledge and tying that strategy to execution. It's a term, strategy to execution, that we've been using for a while in the industry, but it is certainly something that is coming to full fruition in this particular space. So thank you very much. We'll come back to Neil in just a second with some Q&A, but Steve, over to you and our exciting case study that you've been working on and with this customer for some years now. So over to you, Steve.
Thank you, Kramer. Thank you, Neil, as well, and thank you both for setting me up as the main act. No pressure. But no, it's an honor today to present the case study. I'll try and meet the expectations, and it is a great story. It's had a phenomenal impact on this organization. It's really enabled this organization, which was a large, established financial institution, to be able to react like a agile startup and enable them to really provide fantastic customer service and compete within the market and prevent some of the startups being able to take some of their established clients away from them. So it's had a fantastic impact, and just to set the scene and put it into context, what we're looking at here in this example, this use case, is card fraud, and in this case, debit card fraud in this example. And really that's relating to when a customer has some disputed transactions on their statement. So the customer sees a transaction, doesn't believe that they actually created that transaction, contacts the bank, raises a dispute. They then submit the details either in the branch or over the web or over their phone or their tablet for the bank to actually review that transaction and determine whether it is an actual mistake and it's a valid disputed transaction, or they need to refer it because there may be some aspects of fraud here. And the challenge is when they look to refer this or dispute this, this claim, because of the regulations, they have a limited amount of time to go through that analysis. And what happens is they have to pay the customer the amount that they are claiming is a void transaction, and then do the research. And then at the end of the research, when they've got proof, come back and say, actually, that's not a real claim, and that is something that you're responsible for. So they need to effectively pay twice. So this means that anyone who's very quick and able to understand how the bank's fraud analysis is performing basically wins twice. They win on the transaction that they've been able to get, and then the bank pays them again while they're doing the research, and they get that money as well. And then, of course, they disappear, which means when the bank's done the analysis and come back to claim that money back, that individual has gone. And it's a significant amount of money. The institution we're talking about here had many tens of millions of financial impact per month sitting around this particular area, and some significant buffer to handle this part of the business. And because of the complexity, it was predominantly manual. It was a complex set of activities, many factors to consider, and it was quite dynamic because as they would close one hole, another one would open, and they had to try and adapt quickly to plug the gaps that the fraudsters were actually finding, and unfortunately faster than they were able to plug them. And in this project, for example, there was around 150 plus people who were handling these issues and the analysis of the referrals. So it was quite time-consuming, quite labor-intensive, and a large financial impact. So jumping into the actual slides themselves and the presentation, so the situation was the goals that this institution had was to basically improve all aspects of this service. They wanted to automate this. It was, as I said, it was complex, manually intensive. They needed to be able to adapt quickly to new profiles of fraud within the market, and they wanted their business to be able to react quickly, strategy people to be able to react quickly. And be able to have them, ideally, have the new profiles deployed into the operational platforms within hours rather than within weeks or months. In this particular example, the institution had different platforms depending on how you basically submitted that claim into the organization. So if you went into the branch, there were back office platforms that handled that. If you did it online, then there were front office platforms handled that. They needed to have exactly the same profiles in each of those platforms at the same time. And they did want to reduce this financial buffer, and they wanted to drive quality improvements because a number of the issues that they had were related to problems with the quality of data. So those were the goals. The challenges relate back to some of what Neil was saying, and that is getting a common, accurate, consistent understanding of how they're making those decisions and describing the needs that they have to the part of the organization that actually deploys the solution into the operational domain. And importantly, also being able to determine the impact of any changes they were asking for before it was deployed operationally, because they had had situations where they'd been trying to react quickly and had created more issues than were there beforehand. And lastly, being able to deploy this quickly to the different operational platforms that were supporting the front and back office situations. So that was the situation, the goals, the challenges they were facing. They were working manually, as I said. They were working off manual flowcharts that they were guiding this 150-plus team to try and work in a consistent way. And when we looked at those flowcharts and determined how they were actually working today, we found that whilst they had the flowcharts, there was many, many situations where the flowchart came to a stop and it was incomplete. And that was where the human knowledge was actually taking over effectively and making the decisions that weren't documented. And over time, this was not being fed back into the organization, so that knowledge was staying in the people's heads and not being captured by the company. There was also many inconsistencies. There was much redundancy in the process and the sequence they were going through. And they had separate processes for each of the source types. So whether the fraud type or the transaction type was a card not present or counterfeit or intercept, they had different processes for each of those, when in actual fact a lot of the analysis is very similar when you get into that. So much redundancy, and that made it much more complicated to be able to maintain and manage what they were doing and to manage the change. So it was basically a monster that had been created that they could not sustain. So the first thing they tried to do was to basically take these processes and actually look to automate them, so look to model them and map them into some sort of IT solution. So they basically had some modeling capabilities, process modeling capabilities, so they basically modeled the process. However, process modeling in itself typically allows you to model anything that you want without a lot of checks and balances in place, and we find many types of issues that when you look at it, you should not be making these mistakes, but they happen because of human errors within there. And we had many ambiguities in wording between the different processes that were very common. So here's a simple example where you have an intercept step in a process, a counterfeit step in the process, and the decision is, on the left, are there any fraud cases in the last 3 months? If there are, then the case outcome is accept. If there aren't, then refer. In the other one, it was, are there no fraud cases in the last 13 months? So very simple mistake, and someone just getting it the wrong way around, which you don't find until you actually have deployed this into the operational platforms and realize you're not getting the results you need. Likewise, simple mistakes here, card holder aged over 70 and less than 17. That's quite an achievement if you can be both over 70 and under 17. I think we'd all like to be able to age like that. Or a requirement where you check if the cardholder aged less than or equal to 15, and actually in the model it's actually just less than 15, not less than or equal to. So these are mistakes that are easy to make but very difficult to find whenever you're modeling and mapping that process, and typically they only manifest themselves whenever you've deployed it into the operational platforms. And here's a simple example where basically modeled out this process, and we they fed some real examples in here that they'd experienced in real life, which may seem strange, but as I mentioned, part of the issues they had were some of the data quality within their platforms as well that they were challenged to actually fix. And here's an example where you have a 14-year-old customer who basically disputes a case of £50,000. They're actually using somebody's name who's deceased, and they've been doing this in different countries of the world as well. So really, this should be identified quickly as fraud. However, the way they had modeled this and tried to automate the process, the situation is that this case comes in, the first check is the case value under £100? No, it wasn't. Second one, is the customer under 15 years old? Yes, he is. Are there any previous fraud claims? No, there's no previous fraud claims in my organization. So, fantastic. This is a problem on the transaction. Give this person their money back. And the problem is the process terminated there before they had been able to do the other checks. That would have said, whoa, hold on a minute. This is a potential fraud. Let's do some more analysis on this, or we can determine this is fraud now. Let's send the police around to have a chat with this individual. So in this situation, it was sort of like when you have a hammer, everything begins to look like a nail. Basically, this organization had experience with modeling processes. They actually had their manual people implementing processes. So let's just map the process and fix the problem. And this was a case of wrong tool for the wrong job. So when we got engaged, the situation was that they'd been trying to deploy this for about 7 months, and really the deployment had stopped because they were stuck chasing their tail and they could never get the system to work in a way that the fraud strategy team worked. The process was broken, and the trust between the business side of the organization and the IT technical deployment side of the organization had become very frustrated because one side didn't understand what the other side was doing. So our approach really was to, instead of using process to model what is effectively a suite of decisions to determine whether this is a valid fraud or not, whether this is a valid transaction, sorry, or not, use a model and an approach that is very much focused on decisions and decision management modeling. So here we used the decision model to identify what were the immediate issues with what had been configured at the time. So really find out how bad things were. Then use the methodology to elicit the needs from the subject matter experts, and then validate those new needs against the model principles before you actually build anything. So going back to how do we ensure that we've got the right understanding in the strategy team, in the policy team, before we actually ask the technology team to do something. So this is where the decision modeling and management approach really adds value. And when we think of it, a lot of that value is to do with ensuring you're doing the right thing. And I'm sure we've all seen these sorts of vehicles, for want of a better description. A massive ship, the Oasis of the Sea, the largest cruise liner in the world, and the Airbus A380. I don't know how many people look at that and think, how does that float? How does that fly? That should not be possible. But we still get on the boat, we get on the plane, we're confident it's going to take us to our destination because they're both built on solid principles. The boat is built on Archimedes' principle. The plane is built on Bernoulli's principle. So as long as we build a boat on Archimedes' principle, it will float. As long as we build a plane on Bernoulli's principle, it will fly. And one asks oneself, actually, when we are defining what the decisions are, defining what the logic is that's going to define those decisions, defining what the rules are that are going to implement those decisions, are we doing that against a robust, rugged set of principles? And in reality, we're not. We're doing it in a series of best endeavors based on our experience, which sort of means we're destined to not find out what we got wrong until we build something, by which time it's too late. We're then in the mire trying to get out of the testing regime. So what we did, we basically took what had been modeled in the process, we transferred it verbatim into the decision model, and we ran it against the principles, and surprise, surprise, virtually everything turned red. This is not valid, this is not complete, this has got gaps, this is overlapping, this is not being exercised. So that showed us just how bad it was, which was pretty bad. And we used the decision model methodology to model afresh the logic that was required to meet the decisions that they were looking to make, i.e. quickly and automatically identify what was a potential fraud or not and deal with it quickly. So we remodeled the process, The example I'm going to show you is the bit of the process related to the debit card dispute. The debit card dispute process looked like this. Much more simple than that first process that I showed the example on. Much more easy to understand, and the complexity removed from the process and put into the model that's actually designed for modeling decisions. And a model that has all the principles that can automatically validate and ensure that what you've put into it meets all the principles, high integrity, and will meet the business needs. When we did that, we were then able to create the decision model in a format that's extremely intuitive, it's unambiguous, and it uses terminology that everyone can relate to. Terminology that's defined by the strategy people and the policy people, so they can understand it. Terminology then that the technology teams can understand. Glossary of terms that links the business domain to the technology domain, so that everyone has one common understanding. And really enabling you to capture that knowledge and change it from being a liability where you don't really know where it is, you don't know how it's changing, into an asset that is effectively the lifeblood of the organization. This knowledge of this business logic is determining what decisions you're making in the company. And it's the decisions that you make that determine how the company operates. So they got very excited about this. The organization was extremely excited, especially when they saw that actually I've got two now methodologies and applications, one for doing process, one for doing decisions. They both work seamlessly together. So I identify the process, identify the decision, model the decision in the decision model. Then the process would then deploy the orchestration of the workflow down to the two suites of applications, one driving the front office, one driving the back office. And then in this example, the decision manager uses adapters to deploy exactly the same decision logic to both the front office and the back office platforms. So they know that it doesn't matter whether the customer goes into the branch, goes online over the web, or over their tablet or their phone, they're going to get exactly the same experience. So this is another way where you capture the knowledge once, you deploy it across the organization wherever it's needed, and the customer gets a common experience no matter how they're interacting and interfacing with that organization. Which means improve customer experience, author it once, deploy it many, and this has given tremendous value to the institutions that we've worked with, not just in fraud, but as Neil mentioned earlier, across the onboarding, the lending programs, the product matching, so that it doesn't matter where you are within a bank, whether you come into the wealthy investment, you're going to get the same look and feel and be able to get access to all parts of that institution. So they loved it. The other aspect that this institution got very excited about was that they'd been trying to get to a conclusion for 7 or 8 months. We got involved, and everything that I described here we did within 3 or 4 weeks. We were able to automate all of the validation of the knowledge they collected against the principles before they got to UAT. So we removed those UAT principles, and we were able to deploy that into their operational environment within 2 days. And this client estimated that actually you transformed my organization. Suddenly I was agile. I was able to do this 60% faster than before, which was interesting, that figure, because before they never finished. So, but that's a different discussion, different debate. So very exciting. And this is a quote from the fraud strategy manager that we were working with his team, really saying, you know, this was a completely way of using all the information we had to consider all the factors we had to consider at any time, so that we could determine what was the best way to go forward to meet this need before we actually built and deployed. That's it, very exciting. The impact for them, they were able to automate this, reduce the team by something like 80% overseas, reduce that buffer by tens of millions of pounds, and transform their organization. And I think there was also a couple of people in here that got some very interesting promotions as well, so it was a success for all round. So that's it from me, Kramer, sorry. I will hand back to you, and happy to take any questions as may be necessary, and hopefully that was interesting.
Hey, that was very interesting, Steve. Thank you very much. Very exciting to see the application of decision management and the transformation that can occur when customers take advantage of these capabilities. So that was an outstanding presentation. I very much appreciate it. Before we get into some questions, I wanted to talk to you all just a little bit more about the portfolio that Steve shared with you and the set of capabilities that were mentioned on the webinar. Steve mentioned the decision model and the set of principles that the decision model represents. And the decision model is an approach, it is a model, it is a methodology, it's really a science for how you structure your decision logic, your business logic, in a way that can be modeled and understood and shared and tested and validated and ultimately executed across multiple environments. And the ability to do that requires a certain degree of principles, as Steve mentioned in the analogy with Bernoulli's principles and Archimedes' principles for boats and planes. A great story there, Steve. So let's move on to some Q&A. Steve, I'm not seeing the presenter. If you could just try one more time. I'm not seeing the receiving here. The other element that Steve talked about was on, there we go. And the other element that Steve spoke about was, and here we go, I'll just pop that in the screen share mode, was some of the capabilities in the platform. And so I just wanted to spend just 1 second talking about some of the products that Steve highlighted. Decision Manager, Sapiens Decision Manager, is the anchor capability, the anchor component of the Sapiens Decision Suite. That is the core modeling and management environment, and we can deploy models into various destination runtimes using two options. We have our own engine, the decision execution environment, and then we also have adapters and an SDK and XML Web Service integration capabilities as well to other environments. And finally, there is the Decision Info Hub, which is our ETL and in-memory data virtualization product that does what a recent customer told me was his part of his biggest concern. Essentially, he said it comes down to making decisions and accessing the data to make those decisions correctly. It's about decisions and data. And we've added the Decision Info Hub earlier this year in order to access all of the data sources in the most efficient and effective manner. All of this, of course, is powered by the decision model, which Steve highlighted, and the principles that this model supports. So let me jump into some Q&A. And while we're taking questions, I did want to just remind folks about some other activities coming up and some calls to action for you all. Certainly, if you're just getting started, reach out to thought leaders like Neil. They can give you a good sense of where the market is and different projects that lend themselves to the appropriate technology. Neil's a nice guy. He'll buy you a cup of coffee too. So a great person to work with, and feel free to reach out to Neil and other thought leaders like Neil. There's a couple of links here off of the sapiensdecision.com website. You can download the primer for the decision model, which will give you a short but very thorough introduction to the principles that Steve was highlighting earlier. And we have many case studies, not just in financial services and fraud, but across many other areas as well, including core banking, including investment banking, mortgage lending, securitization. Now we're getting into insurance and retirement services, healthcare, government, and more. So although we're focused on fraud and the financial services space today, if you're from a different industry, rest assured we can apply the technology and the approach to your area as well. And if anyone's in the DC area today, come by the Ritz-Carlton in Tyson's Corner. We have an event tonight, and we'd love to host you for some drinks and dinner and a nice discussion. We'll have Barb Van Hollen, one of the co-authors and inventors of the decision model, speaking, along with one of our customers, speaking about their experience and some of the value that they've achieved using Sapiens Decision. Okay, a couple of questions have come in. The first one I'm going to send over to Neil. Neil, given some of the recent news in the industry, especially around SWIFT and the alleged hack that occurred with the banks globally last week, and also around the world of banking and the Open API initiative, can you just talk a little bit about how that impacts the fraud considerations for some of the financial institutions in the context of what we discussed today?
Yeah, well, thanks, Kramer. So, yeah, I wasn't deeply aware of the SWIFT thing until we talked about it earlier on, but clearly it's a pretty major event, and it really just brings home the fact that as we look to create more digital services and compete more effectively in a digital economy, we are essentially creating new attack surfaces, and sometimes quite kind of deep and tangled kind of surfaces that people can attack us in. So, you know, particularly think back to the chart I showed towards the beginning of the webinar. I showed a kind of a bit of a cartoon, if you like, of a dispersed operation, you know, with a core set of offices, but then also shared services centers, offshore centers, partners who are also involved in aspects of operations. So it's not only the kind of public website or social media presence where there's opportunity for incursions and for issues to occur, but actually every point where you're actually, you know, you're coordinating work, you're managing knowledge, you're sharing knowledge across those boundaries is also potentially an attack surface. So obviously that means you need to have very clear understanding of how you're implementing security policies and enforcing those, but it's, you know, it is more broadly a strategic issue for your corporation to think holistically about this and to drive a holistic response. And yeah, particularly about those open APIs there, Kramer, in the UK particularly, there's a big initiative to drive agreement amongst the banks to essentially support an open set of APIs so that third parties can build kind of constellations of apps on top of popular banking products and services. So enabling people to manage their money better, to create more portable accounts, to integrate, you know, banking services into other kinds of services. So potentially lots of great upside, lots of great advantages for consumers, but again, potentially new kinds of fraud possible. Maybe harder to trace the origins of potential fraud activity, and all of this basically is just more examples of how it is so important to think about this stuff holistically and not just look at individual systems or applications in isolation when you're looking at how you manage and detect fraud, but actually taking a much more holistic aspect. And really, you know, the whole decision management piece is a great way to actually start to get a handle on some of that, because you're able to bring all that knowledge together and look at it as one whole corpus.
Very well. Thank you, Neil. And again, I just want to reiterate the point about the shared understanding, the shared knowledge. I think that is a good takeaway for today in helping you prevent fraud. And Steve, another question came in, I think that you might be better at answering this, about other use cases that you've dealt with. Could you talk just for a second about beyond fraud, use cases that you've seen in your interaction with customers, both in the UK, across Europe? I think you're working closely in Australia and the APAC region, as well as with partners in your business development role on the applicability of decision management. Could you give just 2 or 3 other examples that you see as a priority for customers to address challenges today with decision management?
Yeah, sure, Kramer. I mean, we see many areas. One example is within the regulatory space, where it's important to have that clarity of understanding of how you are interpreting those regulations and then how you're actually implementing your compliance with those regulations within the organization. We've done a number of projects around the likes of BAL3, Dodd-Frank, for example, where clients have, again, a bit like the fraud case, struggled to get a common understanding, struggled to then validate that it's given the results they need prior to then going to deployment. And then, of course, with those sorts of regulations, they change frequently. So it's being able to work in a very agile way to be able to determine what's the impact of that change before you actually deploy it. KYC is another big area. There was just a report out, I think, over the last couple of days from Reuters talking about how challenging that is for organizations to basically ensure the compliance and be able to react to the change quickly as well. So KYC is another area where decision management modeling finds a very happy home. Onboarding, product eligibility, customer eligibility, loan origination, lending, process handling, account management, really where there's either complicated processes, the need for transparency and visibility, the need for where there's lots of churn and change within the organization, where you need to have centralized knowledge of that particular aspect of the business that you want to then ensure you are reusing across the organization. So now areas that fall into those criteria really find themselves well suited to decision modeling, decision management. So as I say, if you pick an institution, it's virtually across all areas of it that really lend themselves. And really the best way to do this is, we do what we call a discovery session, which is, if you're thinking of an area, have a chat with Neil, as you said earlier on, have a chat to ourselves, love to talk to you, and we can pick a slice, come together, investigate it, look at what the challenges are, look at how it's being done today, and very quickly over a couple of days you just model something up and see how that works for you, see what benefits that's going to bring. That's really the best way to do it. So yep, have a chat to us, look at what the use cases are that we've got available at the minute, and then have a go.
Great. Hey, thanks, Steve, and thank you, Neil, as well, for joining us today, and thanks to everyone out there listening live and on the recording. Feel free to reach out to us. This has been the 6th in a series of webinars that we're doing throughout the year. You can see others at our website, and as we mentioned, feel free to reach out for follow-up information on some of the links provided. Thanks again, everybody. Thanks, Neil. Thanks, Steve. And so long. This concludes our webinar for today. Bye-bye.
Pleasure. Thank you, Kramer. Thanks, Neil. Thanks, everyone.
Thanks a lot. Bye-bye.
Bye-bye.